Okay, class. So we finished the simulation, and we could see in the nonprofits per team in the last round, many teams were able to surpass the 300 million mark in net profits, and some teams got between 400 and 500,000. In one team here, Benny Auto Group, 538 million in total net profits. Just outstanding performance. And you can see how, as the industry grew and expanded, companies were able to increase their net profits round after round. If we look at the total points per team, we see that yes, in round year one, Y-1, or what I call round one, the points were very large, and I explained in class that you were coming off a bad management team, you made a lot of right decisions, and you were rewarded with year over year points. Moving forward, you wanted to maintain around between 400 and 500 points, as you see most teams did, with a lot of teams pulling in big numbers and points in the last couple of rounds. Many teams are over 600 points in the last year or round. Now we have a new number one in stock price, and this new is Benny Auto Group came in number one with $279 per share, and Tech Part 2, 163, and V at 256. Now down here we have some teams that haven't even broken, a few teams that didn't break 100. As you can see, that big difference in stock price is all boiled down to how well managed the company was and how much you maximize shareholders' wealth. And we can see in sales, so not only did Benny Auto Group take number one in profits, they have number one in sales too, which is an incredible performance. We have this team here that finally broke out of a low trajectory and was able to get themselves somewhere in the middle of the pack here. So we have the top teams here with a number of teams over $1 million in sales, which is $1 billion, should I say. This is in the billions, over $1 billion in sales, just completely incredible. In earnings per share, again, Benny Auto Group really did an outstanding performance in the last round and got the top earnings per share, followed by V and Team 2 and Elon. Okay, so that is let's look at the leaderboard. So again, Benny Auto Group had the highest points, which makes sense. They had the highest sales, highest profits. Some teams like TAJ Dynasty, who were doing poorly, turned things around that last round and was able to get 600 points. So a number of teams got 600 points. Most teams got over 400 points, and there were only a few teams at the bottom here that got less than the 400 points. Some of these teams didn't finish the round, and they were forced forward. And we can see that Benny Auto Group, by the end, they tied with this team, Pants Down Incorporated, with 78% profit margins, which is amazingly high. And many teams here, a number of teams over 70%, and most teams over 60%. It's where you should be at least over 60% by the last round. And we only have only a few teams below 50%, which is a very poor performance, given that some teams were, touching 80 percentile. What kept you so far behind? How is your company not as well managed? Okay, and then if we look at total score, total points. So we have one team over 3,400 points, Elon, and that's amazing. I think it's one of only maybe 2 or 3 teams in the past 5 years I've worked with have gotten over 3,400 points. And we have one team at 3,300 points, and then any team over 3,000 points is doing exceptionally well. So we had plenty of teams. And if I scroll all the way down, you'll see here that we stop here at Triple J. And this is 3/4 of the class, or about 75% of the class, or higher, got the full score on the simulation, which is amazing. Very well done. So let's go and I'll analyze Team 2. So Team 2, this was the team. I want to actually see the team. Hold on a second. So Team 2 was a team that was abandoned by students who dropped the class. Like I was saying, a number of students dropped the class. This team was abandoned, so I took it over halfway through just to kind of use it if you've been following the video series I made on this simulation, giving you ideas and going through each round step by step to kind of help you through the simulation. And this last year, I was able to increase revenues by 49%. I was able to increase gross profits by 8%. And that's pretty much, I was shooting for increasing gross profits, of course, as much as I can per round. But if I could get up between, since I started late with taking over this team, I think I started in the third round after the student dropped out, I was able to get the profit margins up significantly, close to 70% on the gross. So my operational was up 20 and my net was up 20 as well, as I was a little bit more efficient with my advertising and my interest. Total asset turnover, I was able to get up 24% this round, as I didn't have to buy as many assets because I just had to buy a few factories. My return on equity was up by 7%. My earnings per share were up 79%. My return on assets were up 48%. My market capitalization, which is stock price times outstanding shares, was up 73%. My book value was up 67%. My forecasting was not 100% accurate, but close enough. I lost a little bit of points there, and I had a surplus, so I got 469 points for the last round. My total points for this team, if I look at the industry, if I look at the industry, I left off at 2,800 points, and you can see the first year students were running the first year of the simulation, and then they were forced forward in years 2 and 3. I took over in year 4, 5, and 6. And just as if you've been following the videos, this is just my example team to show you how ideas of how to complete each round as you're moving forward. And okay, so let me just back to the top here. Okay, so back to the overview. So this is how the simulation ties in well with the class. So a big chapter in the class was chapter 3, which was financial ratio analysis, and in chapters 3 and 4, financial statement analysis. So in the overview points, there's a lot of financial ratio analysis here. So a lot of these indicators here were financial ratios that were talked about in the textbook. So here is your chance to look into and see how these financial ratios impact the company. And companies are judged by how they improve them year after year. And that's the same way we were scored here. And there were a number of teams that I talked to that had built spreadsheets and models, and they were putting in their pro forma financial statements. I believe chapter 4, we were talking about pro forma financial statements. So some teams use the formulas in creating pro forma financial statements and use the formulas of the ratio analysis chapter to actually reconstruct what their points would be if their sales match. So they could have used, say, year 3 information. They could have put in their pro forma financial statements. They could have calculated their financial ratios and calculated their year-over-year change. And they could easily see by whatever changes they made in the simulation, they could do in their spreadsheet model. And these students were able to kind of get an advanced peek on what their points would be and make changes if the points weren't as high as they wanted. Now, if they didn't sell every car that they forecasted, that forecast would be inaccurate, just like in the real world, but it ties in so nicely with the textbook. So, and when we were in this simulation, when we're working on, the research development, developing a product, you have to be focused on profit margins, which is the overall theme of the textbooks, is maximizing shareholders' wealth. And that's the overall theme of the simulation, is if you want to win the simulation, you have to maximize shareholders' wealth, which is the central theme of the book. And as we get into the weighted average cost of capital, if in this simulation we were looking at, on the capital structure page, the financial page. So if I go into, I'll click into a demo in a second to kind of show you that. But if you follow through, you can go through your assessments, your charts, the industry, of course. All the financials are backed up, which is a big part of the textbook, how financial statements are created, balance sheet, and then discussion of cash flows and how to analyze cash flows. So you could have, and of course the ratios are backed up here as well. So this is all stuff we learned in the chapters Now let's look at, okay, so this is a practice game just to kind of show you how this connects well to the textbook. So in the sales page, here is where you had to manage your gross profits. So you had to build a car, and sometimes you had to give up, some of your customer expectation ranges to get those higher profit margins and develop a pricing strategy and a forecasting strategy. So in chapter 4, we talk about the importance of forecasting and how that affects the pro forma financial statements. So in the marketing page, again, you had to analyze, and some teams actually did take their total advertising. So say it was they expected to sell 1,000 cars and they're advertising using $10 million to advertise. So they could see that you're advertising $10,000 per car. How does that equate to your profits per car? So for example, here, if my profits per car, here's my my sale price and my costs. So my profits would be about $7,000 per car, which means that if I was doing advertising for the economy class vehicle, I wouldn't want to spend all the full $7,000 of the profit of that car just in advertising. So some students learned about managing their advertising budget in relationship to the profits per car. And then the production page, capacity utilization, which is one of the reflective observations, you learned that you didn't want to build or buy production plants you weren't using. It's not efficient. And then in the operational investments, using your retained earnings or capital budget to buy these operational investments. And some teams the earlier you bought these, the bigger benefit you got as you move forward in the simulation. And that's all managed on the capital structure page. So chapter 9 is capital structure, chapter 10 is capital budgeting. So in the capital structure here, as when you take additional funds or you retire funds, your capital structure changes. So this is something that we're learning. So you see how the interest rate goes up. Watch it when I do it again. When I borrow more money, the interest rate goes up. Or if I issue more shares of stock, my earnings per share changes. So this is all capital structure, which we learned in chapter 9. And capital budgeting would be if you have retained earnings or you're going to borrow some additional money, what rate of return are you going to get on this investment? So for companies, if you're borrowing too aggressively in the debt area and the interest rates are going up, say you borrowed very heavily, your interest rates go up to 31%, now that's bad for your company because your company isn't returning 31%. You're not getting a 31% return and on this investment too easily. So this is where the weighted average cost of capital in chapter 9 and capital budgeting in chapter 10 can play into the simulation too, as you invested or borrowed money to invest in in capital improvements, operational investments, or plant and equipment. So, and then of course in the finance page you had that pro forma financial statement here, which we learned in the textbook how to create pro forma financial statements. And some teams actually analyzed and created, once the pro forma financial statement was created, which the simulation does for you, they actually would sit there and say, okay, next year's sales minus last year's sales divided by next year's sales, or next year's sales minus last year's sales divided by last year's sales. You get a percentage increase or decrease in your sales. So you could, ahead of time, estimate what your points were for a lot of your financial ratios that you could have created based on these pro forma financial statements. So you can see here how this is a nice little simulation because it ties into so many chapters of the textbook. When we're talking about risk and return, we're talking about rates, interest rates, rates on loans, short-term loans, long-term loans. When we're talking about issuing stock equity, which is something that you could do here, issuing or retiring stock equity in the chapter 7. And when we're talking about really these long-term debt is bonds, so the bonds chapter, capital structure chapter, the capital budgeting chapter, the financial statements chapter, the budgeting chapter, the financial ratios chapter. So this all ties in very well with the simulation, which gives you a good perspective as a business person. So if you're really kind of pretending you're a business person putting this simulation together and you worked hard with your team, now you know a little bit about how the concepts of the principles of finance textbook relates to running a business. And if you worked well with your team, now you understand how sales, marketing, production, and finance have to work together that come over with the best strategy to win. So companies who didn't do well, I met with a number of student companies that didn't do well, and what I found out from them while talking to them is that they each of them did their own page, but never talked to each other about what they were doing. So there wasn't a high level of communication or coordination between their decisions, and they fell far behind. Some teams would, just have one member work on each round, and they take turns. So if you had, a 3-member team, one member is responsible for round 1 and 3, 2 and 4, 5 and 6. So you might have had 2 strong players, 1 weak player, which killed the overall points of your team because you weren't working as a team. And companies don't do that. You don't say, okay, marketing VP, you're in charge of the company this year, make all the decisions, I'm going on vacation and I'll take over next year. It's just not done in the business world. And there were a few teams where you had a team and a couple teammates didn't participate, so that's an issue too. But this all learning experience, because when you get into the working world, when you go on interviews, they're going to ask you, what were some of your team experiences in college? And that's when you can bring up the simulation and say, well, we ran this business simulation, we worked as a team, and our goal is to maximize shareholders' wealth. And they learned a lot about how the different departments of the company work together, to make a company successful. So anyway, I hope you enjoyed this assignment. This assignment was to give you something a little bit different, something a little bit more competitive, something that was a little bit more interactive on your part. So I hope you enjoyed the simulation, and you can check your points. The points have all been updated on My Finance Lab, so you can check your points on My Finance Lab. And remember, if you earn less than 2,500 points in the simulation, your points, the total points for the simulation would have gone down. And if you didn't complete all 6 rounds of the practice round in the time frame allotted, the due date was way back in the beginning of the semester. If you didn't complete those individual practice rounds as an individual, you would have lost 10 points as well. So keep that in mind when you're reviewing your score. Okay, thank you for your participation, and good luck with the rest of the class.